War is an algorithm. We will show its price. On September 26, 2022, explosions destroyed 3 of 4 Nord Stream pipelines connecting Russian gas to Europe. Construction cost, $20 billion, destruction time, hours. Economic consequences, $300+ billion and permanent restructuring of European energy markets. This is not sabotage. This is economic warfare, where the weapon is energy itself. The numbers reveal the mechanism. Europe imported approximately 155 billion cubic meters of Russian natural gas in 2021, worth roughly $50–60 billion at pre-crisis prices. This represented 40% of European gas supply. According to European Commission data, average European gas prices in 2021, $250 or $300 per thousand cubic meters. Average prices in 2022 after Nord Stream destruction and Russian supply cuts, $1,000, $1,400 per thousand cubic meters. Price increase, 300–400%. The immediate cost to Europe is calculable. Europe still consumed approximately 300 billion cubic meters of gas in 2022-2023, but at inflated prices. Additional cost versus 2021 prices, $225–330 billion for those 2 years alone. This is not money spent on economic growth. This is not investment in productivity. This is pure wealth transfer from European consumers and industry to global gas suppliers and traders. They said, energy trade creates mutual dependence that prevents conflict. They got energy dependence weaponized to inflict economic damage exceeding conventional military operations. But direct cost is only the beginning. The cascade effects multiply. According to European industry associations, energy-intensive industries faced existential crisis. Aluminum smelting requires massive electricity, approximately 15 megawatt-hours per ton of aluminum. European electricity prices increased 300–400% in 2022. The math became impossible. Aluminum Dunkirk in France cut production 22%. Alcoa's Spanish smelters partially idle. According to industry data, European aluminum production capacity declined 30% in 2022–2023. This is not temporary adjustment. These are permanent closures. Restarting a smelter after cold shutdown costs $100–200 million and takes 12–18 months. Many companies chose permanent closure instead. The lost production moved to China and Middle East, where energy costs remained stable. According to trade data, European aluminum imports increased 40%, while production fell 30%. Europe shifted from producer to importer, a permanent industrial downgrade. The chemical industry followed similar trajectory. According to the European Chemical Industry Council, European chemical production declined 15% in 2022–2023. BASF, Europe's largest chemical company, announced permanent reduction of European operations and $10 billion investment shift to China and United States. CEO explicitly cited European energy costs as primary factor. This is permanent industrial relocation. The production capacity leaves Europe. The jobs leave. The investment leaves. The technological base erodes. Germany provides the detailed accounting. According to German government estimates, additional energy costs for German industry in 2022–2023 approximately $200 billion above 2021 levels. German industrial production declined 8% in 2023 versus 2021. Lost GDP from industrial production decline, roughly $400 billion over 2022–2023. German trade surplus, historically $250 billion annually, declined to $140 billion in 2023. Lost export competitiveness, permanent. The inflation transmission affected entire populations. According to Eurostat data, European inflation peaked at 10.6% in October 2022. Energy was the primary driver. Household energy costs increased 4,100% depending on country. For European household spending approximately $3,000 to $5,000 annually on energy, this meant $1,205,000 additional cost per household. For 200 million European households, $241,000 billion in additional household energy expenditure over 2022-2024. This money came from somewhere. Household savings rates declined. Consumption of other goods fell. According to European Central Bank data, European household savings rate dropped from 19% in 2021 to 12% in 2023. This is forced reduction in savings, households spending reserves to cover energy costs instead of building wealth. The long-term impact: reduced retirement security, reduced investment capacity, reduced economic resilience. They said, European economies can absorb energy cost increases through efficiency and alternatives. They got permanent industrial decline, household impoverishment, and structural competitiveness loss. The replacement infrastructure reveals the sunk cost trap. According to energy industry data, Europe invested approximately $60–80 billion in LNG import terminals and related infrastructure from 2022-2024 to replace Russian pipeline gas. Germany built 4 floating LNG terminals in 18 months, normally a 3 to 5 year process. Cost, $10+ billion. These are sunk costs. Once built, they must be utilized to justify investment. But LNG costs more than pipeline gas. According to energy economics analysis, LNG delivered to Europe costs 40–60% more than Russian pipeline gas at equivalent oil-linked prices. This is structural cost increase. The infrastructure locks Europe into higher energy costs permanently. Over 20-year lifespan of LNG terminals, assuming 100 billion cubic meters annual LNG imports at 2 to 3 per thousand cubic meters premium, $200–300 billion in excess costs versus pipeline alternative. This is the weaponization success. Russia inflicted $200–300 billion structural cost increase on European competitors. Even if Russia suffers from lost gas sales, the asymmetric damage favors Russia strategically. Europe's industrial competitiveness declined permanently. This cannot be easily reversed. Ukraine demonstrates the infrastructure targeting dimension. According to Ukrainian government data, Russian strikes destroyed or damaged approximately 50% of Ukrainian electricity generation capacity from October 2022 through 2024. Attacks specifically targeted power plants, substations, and distribution networks. The intent? Deprive population of heat and electricity during winter. The immediate humanitarian cost is visible. Millions without heat in sub-zero temperatures. But the economic cost compounds. According to World Bank assessments, Ukrainian industrial production requires reliable electricity. Every percentage point of electricity capacity lost correlates with approximately 1.5% of industrial production lost. With 50% generation capacity destroyed, industrial production capability declined roughly 75%. The additional loss reflects inefficiency of partial supply and distribution unreliability. Ukraine's industrial GDP in 2021, approximately $60 billion reduction from energy infrastructure destruction, roughly $45 billion annually. Compounded over 2022-2024, $135 billion in lost industrial output. Reconstruction cost for destroyed generation capacity, $15 to $20 billion according to energy sector assessments. The damage inflicted costs 7 to 9 times more in lost production than reconstruction expense. The attack economics favor the offense overwhelmingly. A Russian-caliber cruise missile costs approximately $1 to $2 million. Ukrainian electricity infrastructure damage from successful strike. $50 to $200 million depending on target. Return on investment for attacker. 25 to 200x. Defending against cruise missiles requires air defense systems costing $50,000 or $1 million per interceptor. Ukraine fires 5 to 10 interceptors per incoming missile on average. Defense cost $250,000, $10 million per missile engaged. Even successful defense costs more than the attack. Failed defense costs exponentially more through infrastructure damage. They said, critical infrastructure attacks are war crimes without military value. They got critical infrastructure attacks as economically optimal strategy to destroy adversary production capacity. Iran demonstrates the long-term sanction dimension. U.S. sanctions preventing Iranian oil exports began comprehensively in 2018. According to energy analysts, Iran's oil production capacity, 4 million barrels per day. Actual exports under maximum sanctions, approximately 500,000 1 million barrels daily through sanctions evasion. Curtailed production, 3 to 3.5 million barrels daily, at $70 per barrel average price, $210 to $245 million daily revenue lost. Annually, 76.6 to 89.4 billion. From 2018 to 2024, 6 years, 459 536 billion in lost oil revenue. This is direct loss to Iranian government, but sanctions created secondary costs. According to International Energy Agency assessments, Iranian oil fields require continuous investment to maintain production capacity. Sanctions prevented access to technology and capital for field maintenance. Result: productive capacity degraded. According to petroleum engineering estimates, Iranian fields are losing approximately 8–12% annual production capacity from inadequate maintenance. Even if sanctions lift tomorrow, Iran cannot immediately return to 4 million barrels daily. Production capacity permanently lost, approximately 20 to 30%. Recovery timeline, 5 to 10 years with massive investment. The lost decade is irrecoverable. Oil not produced in 2020 cannot be produced in 2025. It's simply gone from revenue stream. 6 years of suppressed production at $80 billion annually. $480 billion in permanent revenue loss. Iran's entire GDP is approximately $400 billion. The sanctions cost exceeded 1 year of total national economic output. Venezuela illustrates the terminal case. According to OPEC data, Venezuelan oil production peaked at 3.5 million barrels daily in 1998. By 2020, after years of U.S. sanctions and economic mismanagement, 400,000 barrels daily. Collapse, 89%. Venezuelan economy contracted from $400 billion GDP in 2013 to approximately $100 billion in 2020. Population declined through emigration. 7+ million people fled, roughly 20% of total population. This is not temporary sanction pressure. This is economic collapse. Venezuelan oil infrastructure degraded from lack of investment and expertise exodus. According to petroleum industry assessments, restoring Venezuelan production to even 2 million barrels daily would require $50 to $100 billion investment and 8 to 12 years. Under current sanctions and political environment, this investment will not materialize. The production capacity is effectively permanently lost. The global energy market absorbed this loss. Venezuelan oil production decline 3.1 million barrels daily from peak. This was replaced by increased production from Saudi Arabia, U.S. shale, and others. The global production capacity simply redistributed. Venezuela lost market share permanently. Even if sanctions lift and investment returns, former Venezuelan customers now have alternative suppliers with established relationships. Market share, once lost, is difficult to reclaim. They said, energy sanctions will pressure governments to change policy. They got energy sanctions that destroy productive capacity permanently while hardening targeted government resolve. The renewable transition dimension creates new dependencies. According to International Energy Agency data, solar panel production capacity is concentrated. China produces 80% of global solar panels. Wind turbine production, 4 countries control 85% of global capacity. Battery production, China controls 75% of global lithium-ion battery manufacturing. This concentration creates weaponization potential. If renewable energy infrastructure becomes critical and production is concentrated, the controlling nations have leverage. According to strategic analysis, China could restrict solar panel exports or critical minerals, rare earth elements for wind turbines, lithium for batteries, to influence adversaries. The cost to blocked countries: inability to pursue energy transition, forcing continued fossil fuel dependency, or massive cost increases to develop alternative supply. Europe is already experiencing this. According to industry reports, Chinese solar panels cost 40 to 60% less than European manufactured alternatives due to scale and subsidies. European attempts to build domestic solar manufacturing face cost competitiveness crisis. Without massive subsidies, European solar manufacturing cannot compete. With subsidies, the cost is borne by taxpayers, effectively paying premium to avoid Chinese dependency. The dependency is structural. Renewable energy transition requires approximately $3 to $5 trillion global investment by 2030, according to energy transition scenarios. If 80% of solar panels come from China, this means $1 to $2 trillion flowing to Chinese manufacturers. This is wealth transfer and strategic dependency combined. The energy weapon shifts from oil and gas to renewable infrastructure manufacturing. The final calculation is compounding. Nord Stream destruction, $300+ billion in additional European costs over 2022 to 2024. Ukrainian energy infrastructure destruction, $135+ billion in lost industrial production 2022 to 2024. Iranian oil sanctions, $480+ billion in lost revenue 2018 to 2024. Venezuelan oil collapse, $300+ billion in lost GDP 2014-2020. European industrial relocation from energy costs, hundreds of billions in future lost production. Total visible costs from energy weaponization in past decade, over $1.5 trillion. This excludes household impoverishment, reduced competitiveness, lost investment, and future costs from structural dependencies. This is the algorithm. Control energy. Deny energy to adversaries. Adversary economy contracts. Industrial capacity relocates. Population suffers. Government faces domestic pressure. Meanwhile, controlling power gains strategic leverage and economic advantage from higher energy prices or alternative supply. The weapon is permanent. The costs compound annually. The damage is generational. We counted the destroyed pipelines. We did not count the factories that closed permanently. We did not count the households that exhausted savings on energy bills. We did not count the industrial leadership lost to competitors. We did not count the decades of suppressed economic growth from structural energy cost increases. The pipeline cost $20 billion to build. Destroying it took hours. The economic consequences? Over $300 billion and counting. The energy weapon does not explode. It simply compounds.